Hello friends, I'm Dr. Vinayak Pagedar, and today we will be discussing tax collected at source. Many students had sent me messages by saying, sir, please do a video on TCS, and therefore I finally decided to launch a video on TCS to commemorate 1000 subscribers on my channel. I thank you very much for subscribing to my channel and keeping the faith, and so I'll make sure that our community, that is on my channel, our community is really well served. So let us begin with tax collected at source. To understand TCS, let us first look into what is TDS, how does TDS work, and then we'll go into an analysis of TCS. So here we go. There are two parties, my friends. One is a payer and the second person is a receiver. In my example, I have two parties. The fellow in brown, which you see, is the payer, and the black person is the receiver. Now here obviously the payer has to make a payment to the receiver. There's an expenditure involved. From the receiver's point of view, there is an income involved. And let us say the consideration for this transaction is 1 lakh rupees. The consideration for this transaction is 1 lakh rupees, and let us say that the TDS rate is 1%. So when the consideration is 1 lakh rupees, TDS is 1%. What the payer will do is he will actually credit rupees 99,000 to the account of the receiver. He will pay the receiver only 99,000 rupees. So the question arises, what about the 1,000 rupees? The differential 1%, what about it? That amount of rupees 1,000 will be deducted by the payer from the consideration of the receiver, and it will be deposited into the government account, and that is why we call it as tax deducted at source. The total consideration was 1 lakh rupees. 1% goes into the government account, and 99,000, that is the remaining 99%, goes into the account of the receiver. Remember, there are different rates of TDS and there are different sections. The rates may vary. The amount which goes into the government account also varies. But in my example, I've taken the consideration at 1 lakh rupees and the TDS at 1%. So tax is basically deducted at source. It is cut from the income of the receiver and deposited by the payer into the account of the government. So then the question arises, what exactly is tax collected at source? Let's take an example. Now here in my example, there's a buyer and a seller. There's a buyer and a seller. This is the buyer, this is the seller, you see on your screen, and the consideration involved is 1 lakh rupees. The rate of TCS in my example, I'm taking it at 1%. Now how does this work? What the buyer will do is, he will pay the seller 1 lakh rupees plus an additional 1%, 1,000 rupees as tax collected at source. This means, in other words, the seller will collect from the buyer not only his consideration but also an additional 1,000 rupees as tax. 1% of the consideration, 1,000, will be collected by the seller from the buyer along with his consideration, in addition to his consideration, and now the seller will deposit that 1,000 rupees into the government account as tax collected at source. So you possibly see the difference between tax deducted at source, where the amount is cut and paid by the payer into the government account, but here the seller collects an additional tax from the buyer and deposits that amount into the government account. This is exactly the opposite of tax deducted at source. Now I know what's going on in your mind, and you are saying, sir, why? And my question is, to understand that, we need to go way back into the past, back to the memorandum to the finance bill of 1988. So my friends, the memorandum to the finance bill 1988 made an observation that it was very difficult in assessing the income of certain persons who enter into contracts for the purchase of certain goods like liquor, forest produce, etc. What used to happen is these buyers used to enter into the contract, and then these buyers used to play the vanishing act. What I mean by vanishing act is they used to constitute a separate Benami entity just for the purpose of obtaining the contract to purchase liquor or to purchase the forest produce, and later on they were untraceable when the time for assessment of their income came. That means when the time comes to tax my income, to assess my income, I have mysteriously vanished. Now this led to large scale tax evasion because the people who used to do the liquor business were sort of thought to be the mafia type of people. In the olden days, the ordinary man like you and I did not enter or venture into the liquor business or such type of businesses. So the object of tax collected at source was to keep a tab or a watch on the person who obtains the contract or who purchases such type of goods. Correct? So when tax is collected at the point of purchase, that is at a prior point or an anterior point before earning the income itself, then later on when I sell the goods and I earn the income, I can actually be assessed in respect of that income, because throughout the point, right from the point when I purchase the goods, the income tax department is keeping a watch on me because they have collected tax at source through the seller. Correct? Whoever has sold the goods to me has collected tax at source, thereby bringing me on book, on record in the eyes of the income tax department. Now remember, what has happened exactly is the tax is collected at the point of purchase. That is when I made the expenditure. When I made the expenditure, when I pay, the seller collects tax from me. Later on, I am going to sell the goods and earn income. But remember, I have come in the eyes of the income tax department much before I earned the income. And this is the beauty of tax collected at source, wherein such type of assessees are actually brought into the scanner of the income tax department much before they actually earn the income. So I hope that you've understood the logic of tax at source, why section 206C, that is TCS, was actually introduced. Now we'll go further and actually analyze the provision, and here we go. There's a seller and a buyer, and remember, there's a sale of notified goods taking place. We are looking at section 206C clause 1, and there's a sale of notified goods taking place. What are the notified goods? That we'll discuss. But remember here, what the seller will do is he will collect 1% TCS from the buyer the moment he sells the notified goods to the buyer. So we've got a seller and a buyer, and remember, there's a sale taking place of notified goods. What are notified goods? Don't worry at all. I'm going to explain it to you in detail with a memory method too. The sale of notified goods is taking place. There's a seller, a buyer, there are notified goods being sold, and remember, it is the responsibility of the seller to collect 1% TCS in this case. There's a 1% TCS which applies. Now, what exactly do we mean by notified goods? So here we are looking at some clip art, some pictures. This is how you got to picture things, and then I'll even give you a code word for it. So the first, what you see on your screen, is evident. It is scrap. The second is what makes most of us very happy, and that is alcoholic liquor for human consumption. The third is minerals, being lignite, iron ore and coal. Lignite, iron ore and coal. And then we've got two more very important goods covered. The first is timber and forest produce. On one hand, we've got timber and forest produce. Examples of forest produce, you see they are very clearly given on your screen. You've got wild honey, seeded tamarind, dry shikakai, something like the mawa flower, etc. These are forest produce typically. And the last one is, remember, what is used to make BDs? The covering of BDs is the tendu leaves, the leaf which you see on your screen, which is used to make beeries, in which beeries are rolled, that is called as tendu leaves. So when the seller of these goods sells these to the buyer, he collects TCS. This is section 206C subsection 1. Another way to remember is, remember the code word SAM-TT, SAM, SAM-TT. So let's see how it goes. S for scrap, A for alcoholic liquor for human consumption, M for minerals. Ask yourself, which minerals? LIC. Which minerals? LIC. Lignite, iron ore and coal. LIC is not the Life Insurance Corporation. It's lignite, iron ore and coal. So we've got SAM, scrap, alcoholic liquor for human consumption, minerals being lignite, iron ore and coal, and TT, your guess is as good as mine, T for timber and forest produce, and the last was tendu leaves. Correct? Now I've told you that look, TCS will apply of these goods, but let's go ahead and see where TCS won't apply. So section 206C 1A says that look, TCS will not apply in case the buyer is a resident and he furnishes a declaration in the prescribed form, that is form number 27C under rule 37C, that whatever goods we spoke about will be utilized either for manufacturing or production of any article or thing, correct, or also for the generation of power, but not for trading purpose. So if I were to furnish a declaration in the prescribed form that look, I am going to use these goods for further manufacture or for the generation of power and not for trading, then TCS will not apply to me. For those of you who are confused, it's very simple, my friends. If you are going to trade in notified goods, then TCS will apply. But if you are going to use the notified goods for further manufacturer, then TCS will not be levied on you if you are the buyers. So I hope this is very clear. Also, my friends, as per section 206C 1C, the lesser of any right, interest, etc. in a parking lot, in a toll plaza, or in a mine or quarry has to collect 2% TCS from the lessee. Any lessee other than a public sector company, the lessor will collect 2% TCS, and that is given in 206C 1C. Let us read the text. It says, as per section 206C 1C, every person who grants a lease or a license or enters into a contract or otherwise transfers any right or interest, we are typically talking of lessors, the people who lease out, are responsible for collecting TCS. But what are they leasing out? Any right or interest in a parking lot, a toll plaza, or a mine or quarry, and these people will collect TCS from the lessee. Remember, public sector companies are exempt lessees. From them TCS will not be collected, but from any person other than a public sector company, TCS will be collected at the rate of 2%. So let us see a visual illustration of the same. So there's a lessor or a licensor. There's a lessee in the picture. The lessee or the licensee is any person, remember, except a public sector company, and here TCS will be collected at 2%. But remember, what is being leased out? It is any right or interest in PTM. not Paytm, it's PTM, a parking lot, toll plaza, or a mine, not B mine, not B mine, just get out here. So B mine is out, it's any mine where mining is done, or a quarry. So there's picturization for you, so you know what exactly is a mine and you know what exactly is a quarry. So my dear friends, let us now go to section 206C 1F. It says every person being the seller who receives any amount of consideration for the sale of a motor vehicle, the seller of a motor vehicle of the value exceeding 10 lakh rupees shall collect tax from the buyer 1% of the sale consideration. Here what they are doing is they are trying to target people who are buying luxury vehicles. So today if you purchase any vehicle, the value of which exceeds 10 lakhs, if the consideration for which you are paying the seller is more than 10 lakhs, then remember the seller is going to collect 1% TCS from you. But what 1% of what? 1% of the sale consideration. To illustrate it, let's take a practical example, and here is Maruti Suzuki, probably India's leading brand, if not the number one. It's India's leading brand in the sale of passenger vehicles. Remember, there's a seller. Maruti Suzuki is obviously the seller, and let's put yours truly in the place of the buyer. Now let's say I'm buying this car, which is the S-Cross, at rupees 13 lakhs, the consideration of which is 13 lakhs. Then remember 1% of 13 lakhs is the TCS which Maruti Suzuki will collect from me. I hope you've got the point. Now my question to you, dear friends, is if I go to the local liquor store and I buy myself a bottle of Paul John Bold, one of the most beautiful elixirs you can ever get on the planet Earth. This is sublime whiskey. So I buy myself a bottle of Paul John. This is alcoholic liquor and it is for human consumption. So my question to you, dear friends, is will the liquor store vendor, will the seller charge me 1% TCS as per section 206C subsection 1? And the answer is no. We'll come to know why. Because I have to fall in the definition of a buyer for the purpose of TCS if TCS has to be collected for me. So now let us look at the definition of buyer. It says for the purpose of section 206C clause 1 and 1C, a person who obtains in any sale by way of auction, tender or any other mode specified goods under subsection 1, or the right to receive any goods, but does not include. That means the following persons which you see in point number A or B will not be treated as buyers for the purpose of TCS. No TCS is to be collected from the persons mentioned in A or mentioned in B. So a public sector company, central government, state government, an embassy, high commission, legation, commission, consulate, and the trade representation of a foreign state and a club. Remember, from these buyers, no TCS will be collected even if the sale is of notified goods. Furthermore, a buyer in retail sale of such goods purchased by him for personal consumption. So when I go to the local liquor store and buy myself a bottle of Paul John Bold, remember no TCS is charged from me, because I am a buyer who's purchasing it in retail sale and I am going to use such goods for personal consumption. I am not going to trade in liquor. So I hope this is very clear. For the purpose of section 206C 1F, that is the vehicle whose value exceeds 10 lakhs, remember any person who buys the vehicle is liable to TCS at 1%, but certain people are excluded. Again, those mentioned in point A, B and C: central government, state government, embassy, high commission, legation, commission, consulate, and the trade representation of a foreign state. also a local authority. And the last point is a public sector company which is engaged in the business of carrying passengers. So any public sector company who buys the vehicle to ferry passengers, they will not be liable to TCS. So I hope this is very, very clear. Again, the term seller, who all are treated as sellers for the purpose of the provisions of TCS. Remember, the central government, state government, a local authority, a corporation, or any authority established under a central, state, or provincial act, or any company or firm or cooperative society will be treated as sellers. They have to collect TCS. The question arises, will the provisions of TCS apply to an individual and an HUF? The answer is maybe. Remember, if these individuals or HUFs have a turnover which has exceeded the monetary limits given in 44AB in the immediately preceding financial year, then in the year of purchase of such goods, they will be liable to collect TCS from their purchasers. Remember, for the provisions of TCS to be attracted, you have to fall within the definition of seller and purchaser. Then only the provisions of TCS can apply. So as we have discussed, an individual and HUF, if your turnover has not exceeded the limit mentioned in 44AB, that is in the preceding year, if a tax audit does not apply to you based on the monetary limits, then in the year of sale, the provisions of TCS will not be cast on you. There's no liability on you to collect TCS from the purchaser. Okay, so my friends, now let us go to the procedural provisions. And what is exactly the time of collection of tax? When should TCS be collected by the seller from the buyer? Now here, in case of sale of the motor vehicle whose value exceeds 10 lakhs, it is at the time of receipt of the amount. So when he actually receives the amount from the purchaser, at that point he is supposed to collect the 1% TCS. In any other case, in all other cases, remember, it is at the time of debiting the amount payable by the buyer to the account of the buyer, at the time of passing the debit entry, or at the time of receipt of the amount from the buyer, whichever is earlier. Now, after collecting TCS, that TCS collected by the seller from the buyer has to be deposited into the government account. So what is the due date of depositing the TCS in the government account? And it is very, very simple. It is by the 7th of next month. So if the TCS is collected in the month of October, then it has to be deposited into the government account by the 7th of November. So the provision says within 1 week from the last day of the month in which the collection is made. Simple way to remember, the 7th of next month. Remember, now the money has gone into the government account. So you also need to file your TCS returns, and that is called as the quarterly statement. That is form 27EQ. This is the TCS return form. Now the TCS return is to be filed quarterly. So we've got a period and the due date. Remember, for the first 3 quarters, April to June is the first quarter, July to September is the second quarter, October to December is the third quarter. Remember, for these particular quarters, the due date of filing the TCS return is the 15th of next quarter. Very, very simple. If you have made the deposits, etc., in the quarter related from April to June, then the due date for filing the TCS return is 15th of July. For the quarter from July, August, September, the due date for filing the TCS return is 15th of October. But what about the last quarter, that is Jan, Feb, March? So if the transaction relates to the last quarter, then remember my friends, here the due date is 15th of May. So January, February and March is the last quarter. So any TCS return related to that quarter has to be filed on 15th of May. So my friends, these were the TCS provisions applicable to PY 1920. Along with these, I'll be making a separate video of the TCS provisions applicable for PY 2021. Those of you who are giving the exam in November, remember, these are the provisions applicable to you. I'll be making a separate video on TCS in respect of the provisions applicable for May or June 21 onwards. So these were the provisions relating to TCS for the PY 1920, that is for the assessment year 2021. I hope you've enjoyed the lecture. All the best, study hard, be safe, take care of yourself, and see you soon.